Hi, I'm Ron Fink with The Deal, speaking with Bill Casey, EY America's Vice Chair, Transaction Advisory Services, about its Global Capital Confidence Barometer, an extensive survey of executives around the world. Bill, let's start with the current M&A environment. How do you see uncertainty concerning the global economy and political developments in the U.S. and abroad affecting dealmakers' plans, if in fact they are?
Yeah, Ron, I would say probably the most surprising finding that we had of our Capital Confidence Barometer is just the resiliency of the M&A market. I mean, despite all of these geopolitical challenges that we're seeing throughout the globe, the M&A market continues to be three primary drivers. First and foremost, it's disruption that's happening throughout the market. And I would say it's technology-enabled disruption. You look at the automotive business. A lot of automotive companies are considering themselves to be tech companies right now. And they're placing their bets certainly in the supplier chain in terms of the autonomous car and where is that going to go. No one knows yet. So you see a lot of deal activity in that. So disruption, every business, every industry, every sector is looking at, and that's why you're probably seeing smaller deals than more volume. I would say the volume of smaller deals likely to increase. And most of the respondents, around 70 or 80%, said that most of their deals are going to be around 250 million. Not that there's not going to be mega deals, but a lot more smaller deals, again, kind of targeted towards this concept of disruption. The second matter I would say is around activism. Activism continues to be out there, and there's, I would say, the companies have tended to start to bond a bit more with activist shareholders, but the pressure for growth continues. And lastly, we're still in a low growth environment, and shareholders are expecting higher growth, and that is compelling companies to do inorganic growth and pursue those strategies.
Looking at transformative deals, even if they're not mega deals, or is it more a matter of sort of portfolio management in terms of standing up businesses? Activists, it seems like, would focus on the latter rather than the former. What do you think?
There's still a fair amount of that, and I think you certainly see that on the sell side, that companies are continue to challenge their portfolios and focus on their core competencies. And we've seen a real pickup in terms of, say, divestitures and carve-out. And that really picked up the beginning of this calendar year. So we expect more of that. And again, I think that's a function of, one, I think embracing some of the concepts that the activist shareholders are looking for, continue to push companies to drive value and to push up their growth. And so again, it's classic portfolio management.
Valuations are high. Obviously, that poses challenges to deal makers. What do you see, what does your survey find in terms of the priorities of deal makers when it comes to meeting that challenge, and how are they, to what extent are they using data and analytics that they weren't before to make deals work in this environment?
There's no question. Data analytics are providing investors with a whole new set of tools that they didn't have previously. You think about traditional ways that companies would analyze businesses in the past. A lot of it was from a historic perspective, and then trying to make some assumptions, projecting those results in the past and those KPIs to future operations. And now, because of data analytics, the precision in terms of analyzing markets and the ability to place your bets more strategically than companies could have done in the past makes a huge difference. In addition to that, the fact now, through data analytics, that you can use predictive analytics just makes, I would say, the bar in terms of accepting, making the offer, paying a higher premium is highly dependent on the abilities for companies to really, really test their investment thesis.
Well, thanks, Bill, for joining me today. I appreciate your time and your insights.
Thank you, Ron.